Major indices snapping a 5-week winning run after a string of hotter than expected economic data points fueled a roller coaster few days for the market. Unexpected strength in future readings could bring more market volatility in the weeks and months ahead. So what's the smart play for your retirement portfolio? Here with more Yahoo Finance's Carrie Hannon. Carrie, indeed, so a lot of the folks we've talked to have said we could see choppiness in the market going forward.
Exactly. And here's the thing, Julie, it's really, the experts I've talked to are saying, really no rash moves. This is all about fine tuning. For retirement investors, frankly, if you are automatically investing into your retirement account, you are already buying high, you're buying low. So it all over time, it evens out wherever you're getting in. So you're constantly investing. If you're invested in a target fund where it's tied to retirement date, you have a fund manager doing that for you. So it's balancing out of your equities and in the bond holding. So you have a balance in your investments. But here's what the bigger issue is that it's the run up in the stock market in the last year, right? I saw so many people opening up their balances, in January going, oh my goodness, it's been terrific. But here's the point is that's when you need to do that annual review. That's when, you need to just take a look and say, am I close to what my desirable asset allocation is? And that's the mix of stocks and bonds. It's going to be different for everybody. But if you're 7 to 10% off your original intention, then you got to do a little paring back. And in this case, probably in your equity part. And, the rule that often people throw out is 110 minus your age is how much you should have in equities. Now, it's different for everybody, but that's just a way to think about it. The bigger issue here too, so the big issue is the run up, and how did the people who need to really pay attention to this right now is if you are in retirement or close to retirement, okay, let's take a little closer look at the equity portion of your portfolio, because if you feel like you're going to be needing some liquidity to live on some of that for your costs moving forward, you're worried about the choppy markets, well, yeah, okay, let's take some of those profits and put them aside in some cash and some more liquid areas. Not a big deal, just a little pairing and taking some profits there. Again, I want to remind everyone too, though, that, investing in stocks is for the long term, but in today's world, for a retiree, it is the long-term investment you still need to be thinking about. So it's a part of everyone's portfolios.
Carrie, thank you so much for the advice and guidance as always. Have a great weekend.
You too.